to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the man whose main mission in life is to make you a better investor, AJ Brown. Good morning, AJ. Oh, looks like we lost AJ there. We'll go ahead and give it a second to see if we can get him back on the screen. Otherwise, it's just me for the moment. We'll see if he could get popped back in. Looks like AJ's having some computer issues. I'll go ahead and give us a moment here to get this settled. All right, AJ, looks like we lost you there for a second.
Oh, am I back? Am I back?
Yeah, we're back. We're back. Something in the matrix tweaked, but we got you back online.
All right, all right.
Still don't have your screen, but we were just getting the ball rolling in terms of what's happening in the market. And so It's been a quiet week in the economic sector. We essentially kept our trajectory from last week moving in the upward direction, and then the news that I keep reading this week is that the Fed made some remarks to say that, hey, we might continue to raise interest rates in order to fight inflation. What are you seeing on your end? What's the big takeaway this week?
Uh, the big thing that we've been seeing is that people are just starting to take profits. So this is the classic week of no news, right? We always have 1 week in the economic cycle where news is very sparse. And at this time, when there's no like ongoing sentiment in one direction or the other, you're kind of leaving people with a big question mark in their minds about what's going to happen next. So they revert to what they see on, their table. And so what they saw on their table was some pretty good increases in equity prices last week, and so they started to take profits. And that's what we saw. And then, of course, like you said, yesterday, the Fed didn't help that sell off because the Fed came in and said, hey, inflation isn't as tame as some of you say it is. We've got a lot of work ahead of us. And so that caused more sell off.
Yeah, and looking at your S&P, it looks as if we've jumped back up to that resistance level, and
Mhm.
I guess we're gonna find some middle ground here over the next few weeks because we are seeing a little bit of a battle between the bulls and the bears, and it's the bulls this week. It was the bears the week before, and I guess what are we looking at next week?
Well, the scoop is well, let's take a look. I threw my measurements on here, and I'm not only relying on my I guess you would call it digital indicator that just tells me when a reversal is confirmed, but I've also brought on the actual indicator, how close I am to the next reversal. Here's some key takeaway perspective. Number one, we like to look at the 100% retracement line. And the 100% retracement line for us was around $4,375. And as of Wednesday, SIP, we closed above that number. You can see that right here with this bar, and you can see my trend line, which goes always to the highest close. It stopped on Wednesday because Thursday we had a sell off, and today we're not doing that much better. So our highest close to date in this most recent move was Wednesday, and it was above that line. That changes a lot. That basically tells us that on October 27th, we saw the end of our downtrending channel, right? Because if you remember, if we wanted that downtrending channel, if that downtrending channel was to continue, it would have reversed under 100%. In fact, ideally, it would have reversed around here in the 40 to 60%, but it didn't. It bumped up and it kept bumping up. And we don't even know yet if it has reversed at this level or if it could even go higher. But as of right now, because it went higher than 100%, technically we say that the downtrend has ended. In fact, we don't know yet, SIP, if it's going to be an uptrend or a sideways channel. We're kind of in this limbo state of waiting for whatever's going to happen to mature. So that's where we're at. We're waiting to see if anything's going to happen to mature. Right now, if we do get a confirmed reversal that Wednesday was our top, what that's going to tell us is that this is more of a sideways channel, at least out of the starting gate, that we're going to kind of stall at this level for a while. However, if we see some more rally before we get that reversal and we get up above about 4,440, then we're going to start, changing our tune and start looking at things as a bull trend. From what I know, I'm almost my confidence level is pretty high that we're probably going to go sideways choppy for a little bit here and then maybe resume downtrending. That's just putting it out there. I have nothing besides kind of my experience to base that on. So as true traders, we only trade what we know for a fact. And what we know for a fact right now is the market's trying to figure out what its new direction is, and we just have to be patient.
And so my question to you would be, with this pull, with this follow through in the market to the upside, would the VIX correlate in the sense that the volatility has settled down a bit, or are we seeing increased volatility even to the upside? And does it have a impact on what you're thinking in terms of the next couple of strategies or opportunities?
So I'm glad you brought up the VIX. The VIX is the measurement of fear and uncertainty in the markets. And as you can see right here, with that latest uptrend from last week, the VIX started to get calm again. Meaning, the way that the common investor thinks is that the equities market should slowly trot up. So when it goes up, people get comfortable, they get certain, they get much more calm about what's going on. And so the VIX goes down, right? The VIX is a measurement of, sentiment of uncertainty. And so certainty starts to take over. However, you can see that it's flattening out here, which kind of correlates what we've been seeing with this week. We haven't seen a full, like, blown jump to fear where people are buying a lot of options in order to protect their investments. That hasn't happened, but you can see that the progression towards confidence, which would be a lower and lower VIX, has stalled. You
And
asked me what that means with respect to our investments, how we're going forward. Whenever the market, I'm going to go back to the SPX, whenever the market has one of these transitions that it's going through, and it's going through a transition, it's no longer clearly in a downtrend, it's trying to figure out where it's going to mature to next. We have to be careful about thinking too far in the future. Any positions that we currently have open, we have to start tightening and becoming a little bit more aggressive on our risk because we don't know what's going to happen next. And the correlation with the broad market, when the broad market doesn't know what it's doing, our individual symbols don't know what they're doing. So we always have to, when we're evaluating our symbols on a day-to-day basis, we can't just look at the symbol in a silo and forget that there's the market out there. The market has this, like, I call it the tide, right? We can try to surf the waves, but overall, the tide has a big effect on things as well, whether the tide's coming in or whether the tide is coming out. And so right now, we don't know what the tide's going to be doing. So with respect to our individual positions, we have to start thinking a little bit more tighter in our risk, making sure that we're not following the same rules we followed yesterday. We're making sure that if in doubt at all, we start to think about exit strategies. And as far as what we're going to do next, like any new positions, well, we're going to think more short-sighted. We're going to think possibly that our trades won't last as long. So instead, we should favor profit over longevity. A lot of times, I like to trade for positions that last a long time. Why? Well, because I'm lazy, right? I think a lot of folks tell me to my face that I'm considered a very disciplined options trader, but I think, and I'll be honest, behind my back, they call me a lazy options trader. I like to think of myself as an efficient options trader. That's because I like to, do as few steps as possible to get as much reward. So I always favor positions where I don't have to keep researching underlying symbols. I don't have to, the ones that I can put on autopilot. But what I'm here to tell you right now is when the market goes through a transition, you almost have to turn off autopilot and you have to get a little bit more manual for a week or two and make sure that your positions are okay. And when you're thinking about new positions, you're thinking about what can I do in the short term to make some profits while I'm waiting for the market to figure out what it's going to do next.
Yeah, and when we look at the last 2 weeks, the market doesn't know what it wants to do. It dropped, and then we're back at the same levels that we were 2 weeks ago. And on the point of taking the least amount of steps to make the most amount of return, I think that one of the tools that you have created is a great way to take less steps, and that's the indicator that you're showing on the screen now
Hmm.
with the arrows. And so, looking at it from a very simplistic view, the arrow's still pointing to the upside. Therefore, we haven't got any confirmation that we're going to be going to the downside, and we shouldn't assume that unless we have this tool, this lovely tool that you've created that can maybe give us some hints. And so, we've gone ahead and thrown the link to that indicator in the chat if anybody wants to download it. But on that, AJ, real quick, what is the indicator gauging and why is it useful for you in helping you define trends and spotting opportunities?
It's funny you say that. So the beauty of this particular indicator is that we've made it configurable, right? It started out for us as a retracement, this analysis that I do on trends. It started out as a confirming, indicator for that retracement, but with our program participants giving me constant feedback on these indicators, we've actually found it's more multi-purpose than that, right? In its essence, what this is that confirming lagging indicator that you could use in any strategy, whether it be a swing strategy, a trend following strategy, or we like to use these in our premium selling to understand how to leg into the various positions. And so we made it configurable for pretty much, I would say, 90% of your favorite lagging confirming indicators. So for instance, when I'm actually looking at premium selling, this is the settings that I would use in order to do my retracement analysis. But when I'm actually looking for my end of day confirming signals on some of my premium trades, I'll change the setting to MACD type, and I'll change the price. I like to either look at high-low close divided by 3, which brings in the true range, historical volatility. Or I even like to bring in volume weighted average price, the VWAP, which brings in a little bit of confidence, not only in stock price, but knowing that there's a lot or not so many investors backing that stock price. Now, you guys might want to write down these settings. This is not from me. This is from the folks who kind of mastermind the MACD, but they have what's called the fast MACD setting. So they like to use a fast length of 6, a slow length of 19, and a MACD length of 3. And in this case, if we're using it for our end of day signals, we'll go ahead and turn off the 1-bar reversal filter. And that right there is really good for legging into some of our sideways choppy positions. So you can see the indicator already got a little bit faster in its confirmations for us. And in that case, we probably don't even need to, this would be a confusing indicator. So I'm going to actually right click on this guy down here and get him off my chart if I can. Let's see, there it is. And so now we can tell, when we should get in, when we should get out. And you can say, just like you said, even with this faster indicator, it still hasn't marked that we have found a top to this latest move. And I want to warn a lot of investors who are watching our show, when we don't have news like we didn't this week, and we start jumping to conclusions, our knee-jerk reaction is to go day by day. And so there's already a ton of people who saw the stall on Wednesday, started to sell off on Thursday, and now you can see they're buying back. It gets too close, like people are afraid to look past the tip of their nose. And this is when we want to resist that urge and look at some of our more long-term indicators and really think about the bigger picture. Think about, for instance, the winter holidays. Think about 2024 and not start making these day-to-day moves where you'll wind up just leaving money on the table. realize the big money investors out there who we should be following on their coattails, they're watching all this and they're actually possibly, and I don't mean to throw in some conspiracy theories, stoking some of this daily on and off. And they're over there figuring out how to strategize and get all those excess profits on a day-to-day basis. So don't fall into their trap and give them your hard-earned dollars. Instead, let's fight the urge of trading the intraday and instead think bigger picture. That's my advice for this week.
Yeah, and that's part of the lessons that one would receive when becoming a member, becoming a participant of the community. Do you want to run through where we're at on the? Looks like we're pulling up the balance, the Fed's balance sheet here.
I mean, the bonds have been a discussion for a while here, right? Long-term bond yields, oil prices. And I just want to keep pointing out the Fed is really starting to ramp up how many bonds they sell back. So they're behind the scenes doing what we're calling, a lot of people over the last 15 years have heard the term quantitative easing. The Fed has been on a move of quantitative tightening, which has been having a pretty good effect. They already are down to about 7 trillion 800, and this sounds like a big number, but it was up at 9. It was up at 9 trillion. So they're offloading these bonds, and this is having an effect on the markets. And they said they're not going to stop until they get down to around 4.5. So I wanted to point that out. And I also like to point out one more thing, Sip. This is our little tool where we keep track of what the investors think the Fed is going to do at the next interest rate meetings. And you can see this has changed since a week ago. This is for the December 13 meeting. A week ago, it was almost 100% that the Fed was not going to do anything. It was 95%. You'll notice that now people are starting to think, oh gosh, maybe they will raise a quarter point. It's still a minority, but the fact that this number has doubled that from what it was before, investors are still don't have it off the table that there might be a rate hike in December. And then if you go out to the end of January, look, a lot of people, this is also has changed. A lot more people think that there's another rate hike in our future, if not in December, in January. So we'll just have to play it cool, man. And all you can do as an investor is take in all the data and make educated decisions, but not speculative, shoot from the hip decisions, because that's never going to result in consistent wins.
That's right. And if any of the viewers are interested in getting some details on those approaches, AJ's got a wonderful workshop, a daily workshop where he breaks down 4 shortcuts to some of the strategies that we've been discussing, especially in markets where we're not necessarily taking a direction, right? We're kind of just using time and premium. If you're unaware of the concept of premium selling and options, this is a great workshop to head on over there to learn, to get an in-depth breakdown of the things that we're talking about on the show, on the stream. At the same time, we do have a good number of viewers today. So anybody that's interested in getting some specific feedback on names, feel free to throw it in the chat. And if we have some time, we'll run through it. Otherwise, we're going to take a break. We're going to run through AJ's pick of the week, some of our speed round, and catch up on some names that we brought up last week. So if you stay tuned, we'll be back in a few seconds.
In a jiffy. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes. I get it.
Thank you for
All right, all right. We're having some major technical difficulties here today. We're working through it.
We're getting the message out. That's all that matters.
Okay, so we do have a few names and tickers that we need to run through, but before we get into those, I have been getting some questions and just discussions with people that I communicate with the concept of the end of the year. We're in the fourth quarter. We've got November coming up. We've got Christmas coming up. As investors, should we think about the seasonality or the time of year a little bit more than we would in other parts of the year? Does the investing trends change? Is there more volatility? What would you be telling a new investor about the holiday season and what to expect?
Traditionally, Black Friday has gotten its name because the retailers throughout the whole year operate in the red. And it's because of the winter holidays that right on the Friday that follows Thanksgiving Day, the sales that happen, retailers have been counting on that. That's what moves them from the red to the black for the year, so that at the end of the year they actually show a profit. Now, of course, Black Friday, I'm already seeing that a lot of retailers are saying, hey, we're starting our Black Friday sales early. So just like many of the winter holidays have kind of lost their meaning and have just become consumer holidays, I think Black Friday has kind of lost its meaning, and it's now just a marketing term for getting people to buy stuff. But yeah, we traditionally see a spike on Black Friday, and especially in the retail names. So I always tell folks to not only be aware of the broad market. I think taking inventory of the broad market is important. But if you have any candidates on your hot list and your watch list that are in the retail sector, pull up a retail ETF or some sort of chart that looks at the retails and pay attention to it and see how that sector chart starts to deviate from the broad market, like the S&P 500 chart. Take inventory of that and just trade the data as you see it. Now, traditionally that happens, but every once in a while, the consumer outsmarts us and decides that they're not spending this year. And so there's a good chance that could happen this year, right? So much has happened with the Fed intervening in the broad market that, folks may decide that this is going to be a light winter holiday, or they could surprise us and they could be taking advantage of a lot of these sales. Truth be told, when you start to look at some of the news around retailers and how much inventory is starting to stock up because there's been a lot less buying, and even kind of qualitatively, if you look at the number of sales that have already started, which kind of tells you that retailers need to offload inventory and there's too much supply and not enough demand, that's kind of telling you it might be a lighter holiday. But still, never trade speculatively. Look at the data. So pull up that sector chart and trade responsively to the data and trade actual trends. Look a little bit further out in time than just day to day, if that makes sense.
Totally does. And the stat that I keep seeing that may show a sign of slowness is e-commerce sales. I'm seeing a lot of companies that operate in the e-commerce space showing lighter orders at the beginning of November. So we'll keep an eye on that. Obviously, the holidays always create a little bit more action. So we want to make sure that we can analyze the data and be on the right side. Okay. We'll keep chatting about that as the year closes out.
Yeah, let's revisit that topic for sure.
But before we jump into your pick of the week, let's talk about some names from last week. One that continues to be brought up is General Motors. It seems as if they are coming to terms with their workers, but looking at the stock here, it's not being, incorporated into the stock price, basically.
So I went out on a limb last week because I had gotten follow through on my signal. You can see it right here. I'll put a big mark on it. In fact, I'll zoom in on it, and I'll be the first one to admit when I get stopped out. So I got in and was pretty excited about this follow through. I did a small position. If you go back and you watch the replay from last week, I said, let's start out with a small position. Let's see what GM's doing. Well, just yesterday, that position I stopped out at just the ever so slightest loss. I got this technical exit, and the follow through was yesterday. And I played it safe. I took advantage of that technical signal, and I went ahead and liquidated it. Here's my bigger rule. So there's a couple of things that even I have to remind myself. Remember, Sip, that I always like to say I like boring stocks that are not in the news. Well, GM, as you know, has been in the news recently, and I should take my own advice. I should remember that, hey, if something's in the news, it means that there's a whole bunch of people joining in on the buying and selling on speculative, and it gets way too difficult to trade with reliable, consistent patterns. And so I should take my own advice with respect to that and leave GM alone. I just sometimes you get your emotions involved, and I really want, number one, want GM to win. I just think it's a great company, and it makes great earnings, and it always gives out dividends. I think that it's a solid company, but that has nothing to do with what investors judge its stock price to be, right? So I kind of put my emotions in it. I've been wanting to get in on GM. But the scoop is it's in the news. It's a little bit too volatile to be for a premium selling position. And then the other thing is you got to trust your indicators, right? So you know, even though it told me to buy last week, it told me to sell this week, and I didn't want to hold on to a position that the signals say not to. You got to trust. I made a trade plan, and I have to trade the plan that I planned out my trade, and I have to follow that plan. So for now, we're holding off on GM. And the other, I guess I can throw in a third thing. I always tell folks to let the pattern mature. And again, last week I got excited about a bottom being found, but we don't know what the new pattern is. All we know is that the current sell-off came to an end, but we don't know what's next. We didn't let it mature. And I just got excited, and I got in with a small position, and I got out of that small position. So I'm glad somebody asked about GM.
Yeah.
That was Mari. Mari, thanks for asking about GM. That's just how we trade, right?
And we won't shy away from showing that that we were wrong, because every successful investor is going to take some of those losses.
Well, and can I also say we were wrong, but our trade plan took care of us, and we wound up having just the most minimum of losses, which is a win in my case. Every time I follow my trade plan and I minimize my losses, that's a win. So, I'm changing the definition of what a win and a loss is, but following a trade plan, even through a minuscule loss, that's a win.
Without a doubt. And the other name that we discussed last week was, and I'll try and pronounce it in the French way, Schlumberger, ticker symbol SLB. Did I say that right? Schlumberger.
Yeah, or I think the French will actually say they'll get rid of they'll put a Schlumber or whatever. Who cares? The funny thing about Schlumberger is we were looking at our end of day buy signal. And so what I tell my end of day traders to do is, when you get your primary indicator at the end of the day, number one, before you act on it on the trading day that follows, or the subsequent trading days that follow it, if you've got any validation you're looking for, make sure it's there that evening, right? At the end of that day, before you even look at it. So we assuming we had that validation, we then were looking each subsequent day for an opportunity to do some buying. That's where we left it off last week. We were like, we're getting a signal. Let's see if we can do some buying. The follow through that we were looking for on the trading days never happened, Sip. And then it was this past Tuesday, the signal went away. You can see right here. And here's another one, right? Don't get tempted like I did with GM. This is our pattern that we used to be in, this sideways pattern right here. And Schlumberger is now outside of that pattern. And the knee-jerk reaction or the emotional reaction is, hey, if we find another bottom here, let's try to get in at the bottom and get an even lower break-even price. But we can't assume that this pattern that we saw before is there. It's broken its pattern. What the better, more diligent thing to do with Schlumberger is not get emotional and buy at this low, but is to wait for it to form and mature into its new pattern. And once we see the new pattern, trying to trade it. And the alternative is, if you are going to trade it like this, be sure you're being nimble, you're keeping your risk, make sure your trade plan is for a short-term trade like we did on GM. And if things start to go against you and you get your signals, don't ignore them because your emotions want you to stay in it. Follow your plan, get out, cut your losses fast. We're going to have to be nimble right now while the overall market and all the individual sectors and symbols figure out what's happening next.
Awesome. So that was a little bit of a follow-up on Schlumberger. Let's see if we can find some opportunities or a setup strategy plan for your pick of the week. And this is a name that we've covered frequently, a high moving name, NVIDIA, ticker symbol NVDA. What are you seeing in your setup, AJ? Oh, looks like we're losing them again. All right, AJ, can you hear me? We're getting a little bit of lag here on AJ's side, folks. Sit tight. Looks like AJ is back. No, really having some technical difficulties here, guys. Gonna go ahead and check in with AJ to see if we can get him back on the stream. AJ,
all right,
you
are
there?
You seeing me okay?
I think we got you back here. There is a bit of a lag, at least on your screen. Okay. Well, it looks like we may be having some technical difficulties here, guys. AJ's coming in and out here. Really struggling to catch a good stream. So I'm not sure if we're going to be able to continue the stream here. AJ, can you give me one more check-in? All right. Looks like I'm gonna go ahead and have to cut the stream a little bit short here. AJ's having a bit of a technical difficulty, it looks like. But that's all right. We'll see if we can get him to jump back into the stream real quick. Otherwise, we're gonna have to go ahead and move AJ's pick of the week and the setup to next week. So I'm going to go ahead and hop off here for a few seconds, see if I can get AJ back in the queue. Once again, guys, sorry for the delays this morning. I believe AJ had updated his computer, made some updates, and it looks like we're having some issues there. I'm going to hop off, see if I can get him back in the stream. Otherwise, we'll be taking a shortened episode today. Sit tight, guys. All right, guys. Looks like we're gonna be losing AJ here for the rest of the episode. I apologize, having some serious technical difficulties. Do appreciate you guys tuning in. We're gonna go ahead and cut the stream a little short. If you have any questions, feel free to drop it into the chat or up. Actually, looks like we might have AJ back. AJ, up. I think we've got you back.
Oh my goodness, I don't know what's going on here, but let's hope that we can finish out the show without me being all crazy, right?
Well, if we get choppy again, we'll go ahead and close things down. But we were discussing NVIDIA, your setup in NVIDIA, in any opportunities that we might have there.
Yeah, absolutely. So you're seeing my screen, right, Sip?
Yep, we're good now.
Okay. So NVIDIA, this is, if you are kind of on a rich man scale here, and the scoop is NVIDIA looks like it's forming a top. Now, I again haven't gotten the signal yet. I'm going based on support and resistance at about 480. But NVIDIA looks like it's going to be topping out pretty soon. And so there's a couple of things we can do here when we get that signal with validation and with follow through. Is my camera working? I don't see that my camera. Let me see if I can get my camera.
Yeah,
oh, there we go.
Good. You're good.
Oh, okay. Okay. Yeah. I got to figure some things out over here on my tech side. So yeah, following this NVIDIA trade, I'm waiting for a signal. When we get that signal with validation and with follow through, here's a couple things we can do. Number one, we could short shares of NVIDIA. And again, this is an expensive stock, so you have to have a bigger portfolio. I want to emphasize, calculate your max loss and make sure you can afford to do this trade. But if you can, short shares of NVIDIA, and you'd have to short them in lots of 100. An alternative is to incorporate some leverage, which means go with some options that are at least expiring in June 2024, if not farther out in time. And I'm talking about put options here, and go pretty deep in the money so that the put option is actually going to be moving almost dollar for dollar with the stock, only in the opposite direction. So if the stock goes up $1, this put option goes down $1, and you'll be able to incorporate some leverage. And I'm okay doing that, especially since NVIDIA, it does give out dividends, but the dividends are very small. So we're not worried about, the dividends either working against us or helping us out. So I'm okay using the leverage here. So, buying those put options might be a good idea. Now, I know a lot of people have been stocking up on NVIDIA stock. They want to have it in their portfolio for the long term. There's been a lot of hype about NVIDIA. It's one of those 7 tech stocks. So if you have NVIDIA stock, you may consider, if we get that signal, thinking about turning some income out of it. And in that case, when we get that signal, assuming you have that stock, you might consider, selling some call premium. It's selling to open some near-term at-the-money calls and buying some protective options, probably down here at the $400 strike price, buying some protective puts that are probably out in the April to May timeframe of next year for expiration, and setting yourself up for creating some premium on the NVIDIA trade. So just remember, though, that NVIDIA is in the news. Because of that, it can react speculatively whenever there's a news headline. So whenever, like, for instance, the CEO comes out and mentions the word AI, NVIDIA could move responsively to something as simple as that. So be prepared. It's the theme of the show. Be prepared to act, quickly and reactively, at least for the next couple of weeks on anything, but especially anything that's in the mainstream media like Nvidia. But I see a lot of potential on Nvidia. I know that we've got my family, we've got a lot of Nvidia stock, so we're looking at possibly writing some of those calls and buying those protective put options. So there's a lot of opportunity. I'm even thinking about shorting some Nvidia at this point. So let's see what plays out. Don't act until you get that validated signal with next day or trading day follow through.
Yeah, we're finding that resistance, and now we're just waiting for that red arrow to pop in there so that we can take a play to the short side. All right, that's what AJ is looking at this week. Nvidia. All right, AJ, I got a challenge for you because our speed round is going to have to be pretty speedy today. So let's go ahead and run through some names and see real quick if we have opportunities. So our first name is our first ticker is Paul from Memphis, Tennessee, who's interested in energy name Halliburton, ticker symbol HAL. AJ, do we see anything that's worth getting into?
I do. And we got a false signal, just like we were watching on Schlumberger. We got a false signal last week that never gave us the follow through and the signal reverse, but different than Schlumberger. Paul, I see that Halliburton is finding resistance where it found resistance 2 times before, or I should say support, since it's to the bottom side. And so, whereas Schlumberger, I'm a little bit leery and I want to let it, mature into a new pattern. Halliburton's in the same pattern that it's always in. So if it gives me another bottom signal and it gives me the validation and follow through I'm looking for on the actual day of trading, and I get into a long position on Halliburton, I think that wouldn't be a bad idea. I think there's a lot of talk about trying to get as much energy out of here from the United. When I say out of here, I mean from the United States. And so in the long term, fundamentally, Halliburton's in a good place to make that happen. So yeah, I like it, Paul. Let's think about going long.
Yeah, it seems like the recent oil pullback is what's kind of waning on these energy names. At least, I mean, that's good from a consumer's perspective that oil prices are coming down, but it seems to be dragging some of these names with it. So we'll keep an eye on that. All right, moving on to our next name. This is Michael from San Jose, California, interested in ride sharing app Lyft, ticker symbol LYFT. Are you a Lyft or an Uber guy, AJ?
I kind of like Lyft, but I use both when I have to. I use whichever one is closer on the phone. I have them both.
Well, I'm glad they got rid of the pink mustaches. I'll tell you that.
Yeah, that was weird, wasn't it? It's weird because around where I live in Washington, D.C., the Uber drivers and the Lyft drivers, it's the same people, and they're also cab drivers. So I'm not sure it's empowering, the weekend warrior like their original business plan was. But we're supposed to be on a time limit here. So, okay, I got a buy signal about a week ago. I got follow through, and now I'm waiting for an opportunity to sell premium, buy protection. And depending as well, we're wondering if it's even going to go any higher. I would be ready with my Lyft to take some profits. If it doesn't go any higher, I might abandon this position. I might take whatever profits I can get, even if it's just a break-even trade, and find a greener pasture. But if it does start to go higher, like into the 1150 range, I'd be ready to go ahead and sell my call, buy my protective option. If you're thinking about a new trade on Lyft, Lyft does have an overall downtrend to it. So I wouldn't be against, when I do get a top signal like I did about a month ago, I wouldn't be against shorting some shares of Lyft. We're going to do it in lots of 100, because when we sell option premium, option contracts are in lots of 100 option shares. So shorting some lift and being prepared to sell some put premium, and with this overall kind of bearish sentiment on lift, ultimately getting out of that initial covering position at a profit when the underlying symbol goes down. So there's a couple of plays there, Paul. I don't know where you're at on this trade, but I think there's a lot that you can do with lift.
Yeah, and huge contrast in price compared to Nvidia, $400 a share versus $10 a share. So
Yep.
you could maybe even tack on a couple more contracts if you've got the portfolio. All right, so thank you for that, Michael. Moving on to our third and final name in the speed round. This is Todd from San Diego, California, interested in On Holding, ticker symbol ON.
Is that is the typical? I might have.
Is it On Holding?
Yeah, no, maybe not. Hold on one second. Let me see if I can find you the correct ticker symbol.
Oh,
I think I might have.
ON. It's two ONs.
Ah,
ON.
let's put that in there. There it is. Yes. Okay, so I did a little research on this company because I wasn't familiar with it. This is a company that is a holding company that's investing in like sportswear, sportswear specifically, sportswear, and also like shoes, sports shoes, like Nike and stuff. Specifically investing in companies that use, some high tech fabrics. So I thought that was pretty cool. I don't know much about this company, but from a technical pattern, it's not the most reliable pattern, Todd, for me to focus on. There's an earnings coming up here. It's going to be on November 14th before market opens. If I remember correctly, that's next Tuesday. I'm not even sure I would trust an earnings play because it looks like the investors on this particular company, they really react to earnings. So here's what I think I would do. First of all, I'd research it more. And since you even brought this up, I wouldn't doubt that you know a lot about this company. But I would let earnings pass. I wouldn't even try to do an earnings play because earnings have been unpredictable to date. I would let it pass, and then I would see where it's playing around this level. I believe it's a level of support around $25, and see if a bottom forms at this $25, and see if there's anything I can do in the short term. But I'm going to stick with my theme of the day, Sip, and say, number one, maybe we can find a candidate that has a more predictable pattern given the uncertainty in the markets, and put this one on our watch list instead of trying to force a trade that isn't there, right? Trying to force one of our strategies onto a pattern that really isn't there. So that's my first thought. My second thought is if you do want to trade this, just expect that you want to keep your risks very tight and you want to be very nimble. You don't want to let this go a few days. You want to be quite reactive to this. But I would suggest, Todd, that maybe we look for a more reliable symbol, one that we could be a little bit more lackadaisical with.
Yeah, so thank you for that, Todd. Also, I'm assuming that from yesterday's weekly mastermind session with the Trading Trader participants, that there's a few more names that people were bringing up, but we're not going to talk about it on the show because that's exclusive to our members. And so if you want to be part of that crew and you want some of that inside information, head on over, watch the webinar. Look for some of those follow-up emails that'll get you some information on how to become part of the Trading Trainer community and get more exclusive content weekly and daily. All right, AJ, looks like we've cleared up all those technical difficulties. So just want to apologize to everyone for a few of those delays. You did get an upgrade on the computer, and it seems to be not as upgraded as we would like today.
No bueno.
All right. With that, heading into the weekend, heading into next week, what are we keeping an eye on? What do we think? Are we going to get some more news next week that's going to kind of determine this middle move, or are we just expecting some sideways chop next week, the week after, until we get something major of on inflation or employment, or even the Fed even chattering it up some more?
I wouldn't be surprised, Sip, if investors stay quite short-sighted like they have been this week. I think that that's what's going to be playing out. And so we need to, as investors, play the longer game, right? And so don't get excited about these short signals. But at the same time, I think everybody needs to go back through, especially all their open positions, and realize we're not dealing with the same patterns we were dealing with even 5-10 trading days ago. And so revisit your plans, revisit how you're managing your trades, managing your positions, and figure out, a little bit more tighter controls around risk, and maybe make an agreement with yourself that you're going to be a little bit more nimble with your positions, especially the exits. So that's the first thing that I would do. And the second thing I would do is I would start to look as far as my new positions. Don't think so much right now on putting on positions for their longevity. A lot of times there's a compromise. We'll take less profits because we know that the position is going to last longer, and the incremental gains of those profits is exponential, and we'll get a whole bunch of gains on the back end. Don't bank on that for, I would say, the next at least 4 weeks of trading. I would say if you're going to do any new positions, focus more on taking profits up front and possibly trading off the longevity of these trades. And let's wait for everything to kind of mature out and tell us. Let the market tell you what is going to happen next. Don't try to force trades and force the market, to say, I'm going to do this because you need to do this, because the market is not going to listen to you.
All right. You heard it from the main source, the main man of the hour, AJ Brown. Thank you, AJ. Thank you, everybody, for tuning in. Once again, apologize for some of the technical difficulties. We'll make sure to address it for next week's show. If you've enjoyed the broadcast, which I know that you have, hit that like, hit that follow, hit that subscribe button. We truly do appreciate every one of you. We appreciate you guys tuning in, and we'll look forward to chatting it up next week.
Awesome.
Have a good weekend, everyone.
Like and subscribe.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.